A commercial bank is a financial institution that is authorized by law to receive money from businesses and individuals and lend money to them. Commercial banks are open to the public and serve individuals, institutions, and businesses. A commercial bank is almost certainly the type of bank you think of when you think about a bank because it is the type of bank that most people regularly use. Banks are regulated by federal and state laws depending on how they are organized and the services they provide. Commercial banks are also monitored through the Federal Reserve System. A commercial bank is authorized to serve the following functions: receive deposits, take money in from individuals and businesses, called depositors; disburse payments, make payments upon the direction of its depositors, such as honoring a check; collections, a bank will act as your agent to collect funds from another bank payable to you, such as when someone pays you by check drawn on an account from a different bank; invest funds in securities for a return; safeguard money, banks are considered a safe place to store your wealth; maintain and service savings and checking accounts of its depositors; maintain custodial accounts, accounts controlled by one person but for the benefit of another person, such as a trust account; lend money. Commercial banks are probably the largest source of financing for private capital investment in the country. A capital investment is the purchase of an asset with the intention of you either generating income from the asset appreciating in value over time, or both. Common capital purchases made by businesses include things like plants and equipment. The quintessential capital purchase by individuals is the purchase of their homes. Commercial banking is a vital part of economic growth because it permits investment through financing. If investment was only possible through money already saved by the investor, growth would be much slower because it takes a long time to accumulate sufficient funds to buy large fixed capital assets like machinery and factories. Just think how long it would take for you to raise all the money necessary to pay for a house with cash. How does a bank get the money to provide loans? The answer is simple: through depositors like you. Basically, when you deposit money into a bank account, the bank will take that money and use it to fund loans. Banks will make money off the loans through the interest it charges. Of course, it charges borrowers a higher rate of interest than the interest it pays you for the use of the money. Commercial banks are an important part of a modern economy. Such a bank is a financial institution that is authorized by law to receive money from businesses and individuals and lend money to them. Functions of a commercial bank include receiving deposits, disbursing payments, collections, safeguarding money, loaning money, and maintaining and servicing checking, savings, and custodial accounts. Commercial banks' most important role in an economy is probably lending money to investors for purchase of capital goods that help grow the economy.